Let's get into this with Doug Flynn. Doug, of course, is a certified financial planner, co-founder at Flynn Capital Management. He joins us. Right behind me, it says inflation eases, Doug, but does it? I mean, for regular people, as Nancy says, they're still feeling this.
Yes, I mean, it eases because, 2 years ago, the full year inflation rate was 8.3. Then 1 year ago was 4.9. Now the year over year is 3.4. So it's easing in that way, but those are cumulative numbers. You need to add them all up. And so people are feeling the combined effect of that over the last couple of years. And that's just an average number. Yeah, you saw groceries were only up 1%, but you saw some of those other things are still up 20 and 30%. So that's what people feel. Not everybody buys the basket of goods exactly the way that the government decides to put together a basket of goods for the CPI number that you saw today. But it is the sign that you want to see. You want to see those numbers coming down.
Directionally, it's going in the right way. That's why the market is up today. Just let's get that out of the way. And the Fed sees this how?
Yeah, well, I would say this is sort of one step closer to them actually lowering because we had 3 months in a row where the inflation number came in higher than expected. So that's not a good thing. So now it came in as expected. So that's the beginning of that. And then maybe it'll come in a little bit lower. But on top of that, retail sales kind of got missed, but they were flat. And everybody thought that retail sales were going to increase by 0.4%. But it being flat means that, guess what? People are spending money on other things. They didn't spend as much on retail. That's a bad sign for the consumer. So if you add in lowering inflation and the consumer starting to weaken, now we have the opportunity to have them start.
Well, we know they're spending on. They're insuring their car, like Nancy was just talking about. Let's bring it up on the tablet here with the auto insurance numbers, because every month, like I said, it's not like this is new. But when we have figures like this, it'd be 22% year over year, and even on the repair side, 9.7% year over year. And I think from the pandemic, I mean, goodness gracious, 46% increase from the pre-pandemic levels. And then the other one, I'll just punch up shelter real quick. Got to live somewhere. That keeps going up every year. We played the clip from the guy. Remember him years ago? The guy here in New York. The rent is too damn high. He was right, Jimmy McMillan.
He was, and I think that's why Biden is not, getting the results he wants in terms of the lowering inflation, because people are seeing 46% increases. And so it's just not resonating the way that they would like it to. But this is exactly why. The CPI number is great to look at, and you need some number, but it doesn't really tell you what people are feeling. And those numbers actually do.
All right, let me, a couple other quick things real quick. Meme stocks you and I have talked about throughout the week. Is the party over already? I didn't see where they closed, but I think, the AMCs of the world, GameStop, they're kind of going down. You're chuckling. So is it done? There's GameStop at 48.75 down to 40.33, so that's down. And then here's AMC down 20%. So they're pulling back. There was an interesting article. I'll put up the headline from Axios about AMC, because we talked so much about GameStop, but the idea that they've been able to stay afloat. It's not like the business. Here it is. How you survive while losing $7.5 billion. And if you read it at the bottom, basically, the way they've survived is they keep issuing more stock, I guess, to raise money, which doesn't seem like a sustainable business plan to me, but maybe it is.
It does. Well, it isn't really. And so, the market hit all-time highs on all three indices today. We're very, very close to that magical Dow 40,000. We got really close. All-time highs across the board. So that's good. And then you have the meme stocks. They're not going to follow necessarily fundamentals and what have you. But the issue with this is, you may remember a couple days ago we spoke about corporate buybacks, which our X tweet on that got over like 1/3 views, by the way.
I saw that. Yeah, you're blowing up. You've gone viral. Apparently everybody online is upset. Why do you think that is, that people are so into buybacks? But go ahead.
Well, it's interesting because this is the exact opposite of buybacks. This is a company issuing loads and loads of shares. So while corporate buybacks can actually raise the value of a company and the share price of it, when you issue an unlimited amount of shares, I mean, just Monday, AMC issued 72 million shares, and they had just 11 million shares not that long ago, and now they're at almost 300 million shares out there. So that dilutes the value of the shares. So that's how you can lose money, keep issuing, and that's because all of these people out there are all hyped up on buying the stock, and they want more of the stock. So they'll issue it, but it's just diluting it. So at some point, you rip the rug out from under that and look out below. And maybe this is the beginning of that. Go ahead.
It might be when this is starting. The last topic, then I got to run to an immigration story that's coming in today.
Sure.
TikTok. So the guy who used to own the Dodgers, Frank McCourt, I got a picture of him up here on my tablet, but here's the Axios headline on him. He's assembled a, quote, people's bid to buy TikTok. Does this make sense? Here he is, for people who don't know, billionaire, used to own the Dodgers, stepped down as the CEO of his investment firm, and he's been critical of tech and social media exploiting users. You and I have said, and I think you've been saying this, that an acquisition rather than a ban is how this all ends up. Is Frank McCourt the answer?
Well, it's interesting. It's a little bit of a different take. He specifically said he does not want the algorithm. Now, we can argue about whether that's the entire value of the business. The other way he's doing this is he's sort of crowdsourcing between institutions and individuals by using Guggenheim Securities to kind of pull this together. And perhaps it makes sense from this standpoint. If the Chinese government will not sell this with the algorithm, right now, this is the only person who's willing to buy it without the algorithm. Now, we don't know what they're going to pay for it. We have no idea what it's going to be worth before or after without the algorithm, but that's his angle. So he's the guy there that in case they do sell it without the algo, he'll be there to buy it because everybody else wants it. And if this doesn't go and that doesn't go, well, then maybe the whole thing does get shut down. So it's just another interesting take on how they might buy it.
Maybe somebody else steps up to the plate. We'll see. Doug, thank you, as always, explaining all of that. Doug Flynn.